Thank you so much for joining us today. We're going to be talking about cash flow management for your contractor business with Suzanne Cox and Scott Peper. So Scott is the CEO and co-founder of Mobilization Funding, and Suzanne is a frequent guest of ours. We're so happy to have her. She is a shareholder, CPA, and CIT at Saltmarsh, Cleveland, and Gund. And from here, I will let you guys take it away. My last note for you, the attendees, is we want this to be as interactive as possible. Please feel free to interrupt with your questions. Just use the Q&A box, and I will pop back up on screen and let Scott and Suzanne know what your question is, and I'll let them answer. Thanks so much for joining.
You're going to have to teach me about the Q&A and Zoom. I'm supposed to be watching for comments.
For sure, girl, I got you. I got this. So I will hide my view and let you guys take it from here. Just let me know when you want me to advance the screens.
Great. Well, I guess we'll just make a quick comment about ourselves, Scott, here. CIT, in case anyone cares, stands for Construction Industry Technician. So it's a designation from a private governing body. You have to take a test, and it's all about construction. So all of our team over at Saltmarsh that works with contractors is certified in that construction industry tech. So it is it kind of credentials us on the construction side. What about you, Scott? Anything?
I don't have any fancy acronyms after my name, but I appreciate you sharing the knowledge that you have with me, so I can become a little bit smarter each day. But no, I'm just, my name is Scott. I'm one of the co-founders of Mobilization Funding. We find a lot of passion in helping our customers with as much possible information as we can related to construction. Our passion is also in the construction and in manufacturing industries. We started in construction, so we have a really extensive knowledge in that space. A lot of us have a background in construction, and we've worked with so many different customers around cash flow. And we're trying to make sure that you all have the ability to get as much info as you can unrelated to the services that we provide. And that's why Suzanne is such a great guest of ours in helping from a cash flow perspective for your business, but with a real specialty and understanding in the construction world, because it is different than regular business.
It is slightly different. Everybody needs cash though. So Autumn, if you want to go ahead and click us maybe to the, yep. So why do you need cash, right? Everybody needs cash, even if you're not a contractor, you need cash, but we're going to specifically talk today about why contractors need cash. And so a lot of the discussions that I have with my clients throughout the year is, based on margins and profit. And ultimately that ends up in a conversation about cash. So there's a couple different places to get cash. If you haven't done a formal cash flow for your business previously, it's a great exercise to walk through. On this slide, you'll see, sources of cash, uses of cash. So what are those? That's the first step one. If you have not done a cash flow, previously and you wanted to start one, it would be, where do I get cash? Where do I use cash? Get an Excel sheet out. Of course, Scott's team or our team could help you put together. I think Scott has a really nice template for, cash flow that I think is on your website, right, Scott?
Yeah, that and some instructions.
And instructions, fantastic.
Yeah,
so
sometimes you need instructions with a spreadsheet.
That's right. Filters and sorting and all that good stuff. So if you do need help in that department, there are a lot of resources out there to help you create a cash flow. So sources of cash, is revenue, obviously, when you're billing your customers and you're receiving money. And then, of course, you use cash in a lot of different things: payroll, subcontractors, if you're using subcontractors, labor, materials. Those are all of your uses. It's very important to not only project your sources and uses on a company-wide basis, but also on a project-wide basis. And I know, Scott, you get into that a lot with your, in your line of business, the actual project cash flow, right?
Exactly. For us, it's really important to see how taking a bid for a project, and then one of our clients is awarded that project, and that's awesome. So we can easily see what the overall expenses are, the overall revenue they expect to get, and then of course the margin or profit. But what's really important for us is to see how those expenses are going to marry up to the actual job schedule that they have, the schedule in which they need to execute the contract on. So we can see and show them exactly how much cash is needed each week and if there's any gaps in there. And so usually because of construction, there's gaps in those first 60 days before, you do all the work, you finally put an invoice in, then you got to wait 30 days to get paid. There's definitely gaps in there, and just how are we going to manage that and mitigate that to keep up with the project schedule?
Right, right. So it's important to not only look at your job by job basis, but also as a whole company. Where are you going to need cash, and the timing of that cash, and projecting out what jobs you have going on at each time, because you don't really want to fund your next couple projects with the cash flow from the one project, which is very common in construction, is to cash flow your next job with your first job. So if you manage your cash a little bit better, you could avoid some of those pitfalls of doing that. So free cash flow is just a term used, I think, in industry, our industries more so than construction, which is, what are your fixed expenses that you have, and then what's left over. So if you've got a mortgage, you've got vehicle payments, debt payments, et cetera, whatever's left at the end of that is considered like your free cash flow. So anything else to note on this slide, Scott? I think we're just talking about, why it's important, why you need to care about it, why you need to focus on it, and the main premise of cash flow.
Yeah, I was asked an interesting question by a potential client last week. I was on a phone call, and we were just going through cash flow, and their question to me was, Scott, why is this so important? Like, what problem am I going to solve, or what problem am I going to solve, or what is it that's I'm not seeing or is not happening now that I'm all of a sudden going to avoid or mitigate if I start managing cash on project to this scale that you're asking for? And I thought it was a really good question. And I guess I'm turning that around to you, is what would you say I know what I said, but I'm more curious to you as an expert. What would you have said? What is the problem you're avoiding, or what disaster do you mitigate against, or whatever else?
I think when you walk through the exercise of a cash flow, it's just very eye-opening. So it's a bit of you don't know what you don't know. I think in construction specifically, that owners and contractors are very focused on the work. They're focused on getting the jobs done. They're focused on doing a good job. They're focused on not getting sued. There's all these priority items in your business that take precedent, making sure you meet deadlines and you don't have liquidated damage charges, things like that. And so sometimes the operation of the business takes a back seat. And so sometimes an owner can be, I don't like to use the word clueless, because you're clearly not clueless. You own your business, but maybe not as aware or hyper aware of where all of your cash is going and when. And we're going to get into it on a future slide, but looking at the terms that you're paying for your suppliers, and the terms that you're giving your customers to pay you, sometimes there's not a lot of thought and consideration put into those things that can help you manage your cash flow. So I think what you may find are just, again, you don't know what you don't know. So you may say, well, I could change that, or I could fix that, or I don't know why we're spending money on that, or oh my God, I didn't realize, I hadn't really looked at my insurance costs year over year, or whatever the expense is. I pick on insurance a lot because it's, tripled right now. And that's a big area of focus for a lot of people is, how do I get that down? But so I think it's just the exercise of walking through, what do I need to make my business run, and where may I be overspending? We do what's called waste audits for people. And, you're looking for things you don't need to spend money on that maybe you are spending money on. So what was your answer?
I touched on a lot of the things you just mentioned. The one key thing that I think resonated a little bit of all the things I kind of stumbled around when I was kind of caught off guard answering the question, but the main thing for me was, in a perfect world, if you have a $1 million contract and you're going to make 20% on it, and you have $200,000 and it's a 10-month job. If you're going to invoice $100,000 a month and earn 20,000 of your profit every month, you can sort of make that work for you. But if you go on that assumption and it actually doesn't, that's not how it goes. You really don't see any of that free cash, meaning you're spending more than you actually are invoicing, or more importantly, you're spending more than you're actually, the expenses are higher where you're not even able to pull profit off of that. Understanding and knowing that you can't use any of the cash from this job to do anything else other than go on this job. And then on top of that, you actually need to take cash from somewhere else in order to execute this job through this period of time is the biggest eye-opening thing that I think the cash flow shows you. And to your point, if you do have a $20,000 insurance payment due or whatever it may be, and you are excited that you're starting this job because you're going to be able to invoice hundreds of thousands of dollars, but you don't realize that with that is going to be $200,000 of expense, it actually makes the situation worse. The only other thing I would say is by building the cash flow out, you can easily say where your biggest opportunities are to fix problems when you see the entire job cash flows married up to the schedule. And the best example I always give is we were working with a site contractor who's a longtime customer of ours, and they had a $750,000 line item in a big contract, multiple millions of dollar contract, was for just rental of equipment that they didn't own. And by seeing that, how big that was up front, they were able to go negotiate with 3 or 4 of their specific vendors and actually negotiate from a position of strength, saying, look, I'm going to spend $750,000 here over the next 11, 12 months on this project. If you like my business, I need you to help me because this is where I'm at on this job. And they were able to actually pull $100,000 of cost off of that job, which made huge difference in their margin. Whereas opposed if they just started the job, got 3 or 4 months down the road and then became in a cash flow crunch and they had $100,000 due or $200,000 due, they're not in a position of strength to fix that problem at all. And so those are the little things or big things that I think make a big difference, just the empowerment of the information up front.
Yeah, agreed. And Autumn, if you want to click to our next slide, that probably transitions nicely into, how do you manage cash in order to address some of those issues? If you have payments due on fixed costs like insurance and mortgages, how do you work around those? So first is knowing, what you need, assess your needs. What do you have to pay out? Scheduling out throughout the next year. How much cash do I need to just keep the lights on? To pay my rent or mortgage and my insurance and things like that. Knowing those fixed costs and what you're going to need there. Creating a budget. What do you need, again, fixed wise? And then what do you need from a payroll standpoint? You've got some overhead costs there with some office people and things like that. Do an operational budget for each job as well. So most likely you're already doing an estimate, obviously, in bidding on the project. So you're doing some kind of budget. But where sometimes contractors tend to fall over is they create it, they send the estimate, they send the proposal or the bid, they win it. And then the budget goes out the window, and then the focus is on get the job done. We got the job in the door, kind of now what? And so there is not as much concern over the, day-to-day operations of the cash flow of the project versus just getting the project done. So, spending time on that, looking at that, evaluating that. What are, some things to do, decreasing your payment wait time. So if you, are in a contract and the contract terms is that you get paid at, certain specific times or intervals or when, if it's a time and material, a type of job, when certain milestones are hit, there's so many different kinds of contracts, but negotiating that contract, and I think that's probably on a future slide too. So we'll get back to that, or we'll hit it again. But negotiating your contracts up in advance, if you know that you're going to run into some cash flow issues in the near future, that may be something you try to negotiate with that customer. Say, hey, I'm going to need to get paid at these times or at these intervals. And a lot of subcontractors feel very like their hands are tied and that they're going to have to do whatever the GC wants. But if you explain to the GC, hey, I've got this situation, I need to get paid at these, and come up with, collaborate and come up with a mutual agreement, that if they want to use you, they're going to use you. They're going to do, and try to come up with a mutually convenient situation there. So don't assume that your hands are tied when it comes to contract negotiation. Also, when you're making payments on vendors, if you can get net pay in 2 days, and get a discount or something, you need to look at that. You need to say, hey, if I have the cash up front, I could save 10% on this total material bill. Or same thing with, customers on the flip side is, well, if people paid me early, I could give them a little discount. So if you need that money and you need it, because again, you did your budget and you've got your timeline lined out and when you need this money, if you needed that money early, you could offer a discount and say, hey, if you pay me up front, I'll give you a 2% discount or whatever that, percentage is. And that they, again, help you manage your cash flow. But it's a matter of sitting down and looking at those numbers and figuring out what makes the most sense. But those are, things to look at, immediately, is look at what are your payment terms and your collection terms with your customers and your vendors. So some vendors, if you are working with them, I think Scott, you mentioned, if you're buying a ton of supplies, maybe you can negotiate, hey, I'm going to pay you in 60 days instead of 30 days because I'm going to order this, volume of product from you. Maybe they will be more friendly with their payment terms if they know that they have, a lot of money coming in from you in the next couple months. You have to be careful on, cutting and delaying expenses, because you also don't want to ruin your reputation or your history with a supplier. You want to take care of your suppliers and your subs. If you are subbing, even if you're a sub and you're subbing, you want to take care of those people because they're, companies or people that you work with on a regular basis. So you don't want to ruin those relationships or burn any bridges there. So you want to always have that conversation up front, hey, I'm having cash flow issues, or I need to manage my cash flow. Everybody in business understands that. So don't view that as like, I don't want to admit this or something. Everybody has, these issues. And so it's a matter of talking to them about it versus just not paying them, for 90 days or 120 days. And then they don't want to do business with you. But if you told them up front, hey, I need a little grace on this one. Can we, do a 60-day term? Most people want their money eventually. So if they can, be flexible with their terms, they will, versus just not getting paid and you going out of business, and then not being able to pay them at all. And so then, of course, using debt wisely, leverage is not always a terrible thing. I have a lot of contractors that just hate debt, and I get that. I understand that, but it's not always, a bad thing. People have lines of credits for very good reasons. First, in construction, obviously you'll get surety credit for an empty line. But if you have a line, you don't want to use it like a term loan, so if you have a $500,000 line, you don't want to keep it maxed at 500,000 all the time. You might as well just get a term loan. So if that's the case, if you're running your line of credit at $500,000 all the time, and that's your limit, you may want to look into talking to your bank about possibly terming that out, getting better, more favorable terms at a lower interest rate, and then getting a line that's maybe smaller, that you could use for actual day-to-day and operational cash flows. So that's one thing, again, that I think people are also scared to reach out to their banker and tell them, hey, I don't think this is the most favorable position for me to be stuck with this line of credit that's always maxed out. And I'm never able to use it like a line of credit. And I would like to, discuss terming it out and getting, more favorable interest rate or better payments or something like that. And right now, banks are very open to those discussions, especially with the, pandemic still not quite having, gone away yet. And everybody is still in this, the SBA is still lending till the end of May under PPP and EIDL. And so there's a couple options there as well. If you can't get a traditional loan through a traditional bank, there are some really nice SBA options right now. And then Scott, if you want to comment on how you guys can help from a debt side as well.
Yeah. So in our product from a debt perspective isn't for debt for your business. It's really cash for you to execute on a contract. So think of it like your job and your project and your business is running like normal. And all of a sudden you get that next job that you've been waiting for, and it just doesn't have the perfect timing. It's about to start right now, or you have multiple jobs starting right now, and there's just going to be a shortage of cash. Well, we're here to provide the financing or cash that's needed up front before you start the project. That's going to allow you to have the money you need to put the materials on there, put the right labor force on there, and not put stress on your current operating budget that's inside your regular business. So essentially, imagine running and executing a project without putting any stress or undue pressure of cash needs from your current jobs or not. So it allows you to grow or allows you to do more jobs at the same time. And then we just get paid back as you execute on the project and invoice the project once it becomes to get you to the cash flow positive point where the job can run itself. The one thing I wanted to ask you, Suzanne, too, is you made some great points on this slide and talked about a lot of things. And as I was listening to you, I understand them, but I was thinking about it from a business owner perspective that may never, that's just hearing this all for the first time. You're like, well, that sounds great, but what the heck do I do? And it reminded me back to something I learned. I read a book called The E-Myth. And what was great about the E-Myth that I learned, there's three types of people essentially in business. You have the big thinkers, the people that are out about, the essentially the entrepreneur that thought about the idea, was willing to take the leap and knew where they want to go. And then there's the technician that is an operator, and they know how to take that big idea and they know how to execute on it. And then the third piece, which is equally as important, is the financial expertise. And one of the cool things I love about the financial expertise is most people aren't all three. Matter of fact, they're not. And they tend to be one or maybe two. And most owners of business that are in construction are really the big thinker and the go-getter, and they're also the technician. So my point in telling you all that is you can try to learn all these things, but you don't have to, and you shouldn't. And if it's not part of your skill set, this is where you should spend some of your money and hire this expertise, because there's a reason why Suzanne has initials after her name. There's a lot of technical expertise and training that goes into these type of things. Whereas when the information is presented to you as a business owner, you can easily and effectively make these decisions. Simple. But setting the table for yourself with all the right information and tools so that you can make the decision is the hard and daunting part. You can take some of your profits and hard-earned money and hire Suzanne, and she can set this table for you so you can effectively make decisions, and you can dump the information in an organized way. She can set the table for you, say, here's what it is, and then you make the choice and decision. And I think it's important on this slide, after you heard all those things, to just, if you're going to take away anything, don't be overwhelmed. Just hire a good CPA that can help you. They're not just for doing your taxes. This is regular, like ongoing, a partner in your business that can really help you generate a tremendous amount of wealth and profit and avoid mistakes.
Well, thanks for the shout out.
But I'm that way myself. I'm not the finance guy in our business. My partner is. Partner you probably never see. He's not the one that's on YouTube. He doesn't do webinars, but he's the one that sets the table
corner with his 10 key.
Yeah, he's a master on a spreadsheet. He's the best partner you could ever have. He's the thing I'm not. And I'm exactly what I just described to you guys. I understand how all these things work because I get the table set for me and I know how they work now, but I couldn't set it.
I think also you mentioned an external CPA. It's also important, depending on the size of your business, to have a good, internal person as well, and a good accounting team. And, sometimes they just need to be directed if they aren't giving you monthly financials or monthly business operational reports that you can, really chew on and get what you need, dashboard style. Like, here's, the main points. If you're not getting that now, look into that. If you need to get an external party, a CPA or consultant to help you with that, that's great. If you can get it internally, that's great too. So whichever way, route you choose to take, get it, get it from one of those two sources. Yeah. And so it may be a matter of your internal person just doesn't know what you need to see or hasn't been, trained or skilled in that area. So, get them some help to provide you with what you need. And again, back to that, you don't know what you don't know. That may be where you want to get the external person to tell you, well, this is what you don't know. So here's what you should be looking at. And here's how you can look at that information and that data, and here's what to do with it. There's some fantastic ratios. All of us in the CPA world are geeks, and we can really dig into data and really get excited about data. And so part of what we do with clients, especially during this season, it's real busy right now for us, is sitting down and saying, okay, well, your competitor in the same, NICS code, which is like your industry code, is making a margin of this, and their net income percentage is this, and their insurance to revenue is this, and their payroll to revenue is this. And one of my favorites is, if you have 10 employees and $1 million in revenue, how much revenue is each employee generating? And that can be a really nice metric for you to look at. I'm getting off cash flow here, but those are the kind of data analytics that you want to keep an eye on, that all directly end up to your cash flow. So even though they're not direct cash flow ratios, they affect your cash flow, because if you're overpaying, salaries and you're not getting as much revenue per employee that you need, that's going to affect your bottom line. It's going to affect your cash flow. So some of those ratios will help you identify, where am I? Where do I have waste, or where am I overspending, or where could I get more efficient? How could I be better? And so that might be where you want a third party to tell you, hey, here's what you don't know, here's what you should be looking at, and get you on the right track. And then going forward, you can keep an eye on it. And just a side point there is, depending on how clean your books are, if you've got somebody in there doing a really great job, the data is only good as what goes out is only as good as what goes in. So if the data going in is not accurate and it's not, right, then the data coming out will skew those reports. So just keep that in mind, that one size doesn't fit all with accounting and reporting. So anything else to add there, Scott?
Nope, I think we're good. Move next slide.
All right. So what are some management tips that you could start now? I know Scott said I flew through the last, there's a lot of stuff there is. We could be talking about cash flow for hours. They told me I only had like 45 minutes, and I was like, well, geez, I can't even scratch the surface in 45 minutes, but I'm going to try. So what are some cash flow management tips? So weekly team meetings is probably one of the most important things that you can do if you don't have them starting now, is include your project management team with your accounting team. And some of you might be sitting here thinking, oh my God, there's no way that's happening. My accountants cannot be in this meeting with my project team, and they're just gonna fight the whole time, and my project team it's not going to work out. Make it work. So whatever you need to do to make it work, make it work. Have conversations with people if they are not getting along or playing nice in the sandbox or whatever. I hear this a lot, this is the feedback I get when I make the suggestion. So maybe it's not a problem for you, and maybe your teams all get along fantastically. And if so, that is amazing. Double their pay. Just kidding. But it is a friction spot, I think, when you get the project managers and the accountants in the same room. And so part of having an organized meeting is having reports. And so being able to show the project team, hey, here's the job budget. Here's what you've spent so far. What are the change orders? Let me get that in my report. Having accurate information, because remember back on the last slide, data in, data out is only as good as data in. So if your accounting team doesn't understand that there's change orders and there's new adjustments to the initial estimate, instead of 100 square feet of a certain tile, you now have 400 square feet of that tile, you're going to have to buy extra tile, and you did not estimate for that. So are you going to have a change order for that 300, or are you going to have to eat it because you screwed up the estimate? Those are two very different scenarios, but either way, your accounting team needs to know which one it is. Are you going to eat it, or are you going to change order it? And that will help them, put in, okay, they're going to have a change order. So we're going to up the income, and we're also going to up our costs. That ultimately affects your cash flow, because if you have to eat it because it was an estimate problem, that means your cash flow just went down by 300 square feet of tile, and they need to budget for that. They need to say, well, somebody else has got to take a cut here. Who's going to take a cut? Who are we not going to pay because you need to manage this project and get it done and go spend this money on tile. They may know things that your project team doesn't need to know. I realize that, like the fact that your line of credit might be maxed out. Maybe your project team doesn't need to know that, but they, again, accounting needs to know what project management needs are, what their cash flow needs are. So then they can come to you and say, hey, boss, we've got a maxed out credit line. The estimate on this job was blown. We've got an additional $10,000 that we didn't see coming. We need to talk about what decisions you want to make. Who are we, what are we going to do? Who are we not going to pay? Or, what are we going to do about this? So those meetings are so important. I cannot stress this enough. I could be here for another 20 minutes talking about why these meetings are so important. I touched a little bit already on the reduced friction. So there is going to be friction because, accounting by nature is like, don't spend, save, we need to have a good balance sheet and we have to worry about these numbers. And the project guys are like, we got to get the job done. And, they're always, it seems, at odds with what is the most important piece, right? So you do have to work a little bit on, reducing that friction between the two teams. And again, that can be done with having organized meetings with agendas and reports and, keeping them on task as far as, okay, let's go through the jobs. Let's look at, the estimates and the budgets and talk about what's going on at the job, give accounting what they need. And then, they can move on if your project team needs to meet outside of that. Even sometimes just letting accounting listen to some of those meetings is really important for them because they know, then they can hear what's going on, so that they can adjust their budgets and their numbers. And so when they come meet with you to talk about cash flow needs and bottom line, they have some clue of what's going on. Don't keep them in the dark. That's not doing you any good. So reviewing accounting policies, this goes back to, we started talking about this in the beginning, is, what are your terms? Do you pay people bi-weekly? Do you pay people monthly? Do you pay people every day? Are you paying cash to people? Are you paying direct, through a payroll agency that you have to pay in advance? What are your policies as far as, PTO time? Are you paying that out to people that quit? Are you, spending a ton of money up front when you get a new employee in and they have to have uniforms and training and et cetera, et cetera, et cetera. So if hey, I need to hire 20 people in the next month and onboarding costs for one employee is $4,000. I'm just throwing numbers. You're probably like $4,000, but depending on what kind of training you need to send them to, you need to know, okay, well, I have to onboard 5 people. That's gonna be 20 grand next month. So you've got to onboarding and then tying that into your budget. I know again that probably Scott's probably like, this is too much, so much information that I'm unloading on you. But I also just want you to know to think about these things, because again, back to the, you don't know what you don't know. If you're not thinking about them, then you can't fix them or you can't work on them. So I'm hoping that you're just picking up some, oh my God, I never really thought about that. Or yeah, that's a good point. And, maybe I should go back to my accounting department and talk about what's the cost of onboarding an employee, maybe not every company knows what that cost is, or maybe it's not as relevant for you.
I would add,
contract language.
As a business owner, all the things you just talked about can be given to you in a weekly dashboard that you could see how all these ebb and flow. So like where I would say you work with your CPA, like Susan, you'd have this conversation once, and then you'd build a system that gave you one report that showed you all the levers of everything she just talked about, that you now manage to that in a meeting with one report. So it sounds like a lot, but it's reduced to a report that then you just manage off of. And it's very simple, but it's not simple to get to that. It's simple to get the table set and then produce the information. But it's once you get there, then it's very simple for you to run the business on this side. Sorry, I just wanted to chime in on that.
Yeah, no, chime in anytime. So QuickBooks has come out with some very nice dashboards. I'm not sure what everyone uses here from a software standpoint. That's one of the more basic softwares, but there are some nice add-ins for QuickBooks. So even though it's considered a base bare bones, kind of software and not necessarily a very good contractor software, it will do its job, up to a certain size. And depending on what your type of construction is, it may be a good option for you. It may be a good software, but they do have some really nice add-ons from a dashboard perspective that you can, if some of you might be thinking, I've never even looked in QuickBooks, that's my accountant's problem. That's great. That's maybe how it should be, but you can get reports out of it, which wouldn't require you touching it or getting into it. It could be that your accounting person is sending you this report either daily, weekly, monthly, quarterly, whatever your choice is on how often you want to see these reports. And they're tailorable. You can have the data points that you would like to look at. So if you haven't looked into something like that, it's a good thing to just look into what are the plug and play options on QuickBooks or whatever software you have. Dashboards are so helpful because in the morning you just, okay, I've got this going on. And then you can manage your day or manage your week or, again, however timely you want accounting information. It might be overwhelming, so you want to just look at it monthly. So back to reviewing contract language and negotiating. We touched on that already, so I don't want to go into it. Just understand the point there is that a lot of young contractors or smaller contractors are hesitant to, try to negotiate terms with either a GC or if you're a new GC, try to negotiate terms with the customer because you just need customers, right? But you also need to keep your business in business. So I always caution people against, going in too low on bids just because you need money or just because you need work. It's better to sometimes, pause and reflect on if that makes good business sense, because you don't want to pay money just to, have a job. So I know that's a hard pill to swallow sometimes when you're trying to grow and you're just looking to increase revenue, that you take jobs that may not be the most favorable terms or the best margin. And then sometimes those jobs, they started at, say, a 10% margin and then they really went south. The next thing you know, you're paying, you're negative 3-4% and you're paying somebody to do work for them. So obviously there's a lot of things that go into that, but if you already know off the straightaway that this job isn't going to make money, we talk with so many contractors, again, busy season right now. So we're having these conversations. We're looking at, gain fade analysis is where you've got a job 1 year and the contractor says, yep, I'm going to make, 10%. And then the next year you see the job closed at a -5. So we're having the discussion, how did you go from 10 to -5? And most of them will say, well, we just took that job because we needed work. We just needed work. And the 10% was probably unrealistic. It really was probably started at break even. I'm like, it started at break even? Like, really? So some of you might be thinking, yep, I've done that. And so you're not the only one. So don't get me wrong. I understand that sometimes it happens, obviously, but just think very hard about those decisions because it's not, again, this seminar is on cash flow. It's not the most optimal decision from a cash flow perspective. Scott, do you have any stories of contractors? I know I've got lots about, things like that, especially now during busy season where we're talking about gain fades and things like that.
I mean, the only thing I would say is I could tell a lot of stories on it, and I agree with what you just said. I have a little bit stronger opinion. I don't think you should do any job that you don't make money. I just think your time's too valuable. I think your employees are too important. I think your business is too important. Everything you risk to get into business. And so if you do it unintentionally, then that's part of business. You learn and you live and learn. But if you do it intentionally, and the things that I would typically hear are, I just needed to keep cash coming in. Maybe you need to just shrink the business down instead and hire people back later or furlough. And nobody wants to do that, but you're not helping an individual or yourself or their family by just what I would call kicking the can down the road. If there's a problem right now, you should address it. If you take a job on that is just going to kick the can down the road and hope that something else comes about that's going to carry you out of it, or you borrow money in the hope that it's going to help carry you out of it, it's never, very rarely, if almost never, I don't want to say never, but very, 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 very rarely is that ever turn out to be a positive solution for you. That's all. That's my opinion on it.
Totally agreed. Like I said, sometimes it's hard, tough pill to swallow, but
Sure.
when you hear from an external person, it's always easy to give that advice and not always easy to take, but definitely strongly consider.
And look, I've made that mistake before and learned the hard way. So I'm saying it.
I think we all have. I can tell you we've all made it, no matter the industry, but I would say construction, I hear it more so than any other industry.
Yeah.
So Autumn, do we have any questions yet? Or Scott, do you have any questions for me? I know I probably went fast, like you said, but is there's anything you want me to touch on or elaborate on?
Autumn, do we have any questions in the queue?
Nope, there's nothing in the Q&A yet, but I encourage all the participants, if you have a direct question, please drop it in the Q&A. And then, of course, if you have a question later, you can always reach Suzanne and Scott directly. But yeah.
I have one then. Suzanne, if there was just one single actionable piece of advice that you were to boil down into this, and I know that's maybe unfair, but if somebody was going to listen to this and took the time and they were going to walk away with one thing in your mind that was the most important, what is that one thing?
So I don't know if you guys could tell by the volume of time I spent on weekly team meetings, but if we're talking actionable items, I would go back to your office and have a team meeting. Truly, that I can't stress the importance of that enough, because you find so much out, right? So what you do from that team meeting is up to you. Obviously, do you then create a budget from it, or do you, what do you do with that information? But if you aren't talking to your teams, both of them, accounting is the one everyone ignores because they're not revenue generating, right? But they're still really important. So I promise you, they've got information. They need to know information. They like information. That's why they're accountants. So keep them in the loop on some things. I again, actionable items, that's probably my top tip, is go back and talk to your people and try to get them to talk to each other. You'll find out a lot of stuff. And then during that meeting, jot down the three most important things that your team says you need to change. Listening to your people, because they're out in the field, they're in the day-to-day operations. Maybe you are as well, but they've always got intel that you do not have. So listen to them and listen to what they say you need to do, and then come away from that meeting with, even if it's one item, what is the most important item that your team thinks you need to fix tomorrow?
I agree. I think you're going to find the solutions to a lot of problems inside that team meeting and on your own team. Just empower them and share with them the things that are about the business, good, bad, and ugly, and they'll really help you solve those problems. You don't have to do it alone.
Yep. And part of that is having good team players, right? So if your people aren't engaged, look for new team players. If you have that team meeting and there's not a lot of friction, there might be something wrong with your team.
There's a question that actually popped up. I think it's a good one. I think you'd probably be best to answer this, Suzanne, but with interest, this is from Carol. With interest rates so low, is it a good time to talk to your banker about consolidating some equipment loans or other notes payable that are at higher interest rates? And can this increase cash flow?
Absolutely. So especially, I mentioned the SBA loans earlier that are available now, really low rates. Interest rates in general are really low right now as well. So if you're looking at consolidating, which I think it says here in the question, consolidating loans is a really good time right now to do that. If you can get an idle loan, the intent of it is for working capital. To help you keep your business running. So you want to watch what you're doing with the idle money. It's not to pay off other debt, so keep that in mind. But hopefully having that loan for working capital would allow you to have some extra cash flow to maybe pay off some of that other debt. Or, talk to your banker about a traditional non-idle, obviously your non-SBA loan. Talk to them about equipment financing. A lot of banks do just equipment financing. So you don't even have to move all of your deposits there. So if you're nervous about switching your banking relationship, which I totally understand, you know, a lot of people are like, "Ooh, I don't want to look at another bank because I'm going to have to switch everything." My husband's in construction, flooring company. And when you even talk to him about moving his remote scanner for his deposit, he breaks out in hives, you know. So it's really stressful thought to like switch banks, but you don't necessarily have to switch your bank to consolidate your loans. So talk to your bank first, obviously, and then if they don't do equipment financing, then talk to some other banks, and you can get a purely equipment loan with a bank to just, you know, just finance your equipment, and then hopefully that would free up some cash flow for you. Hopefully that answered it. Anything you want to add to that, Scott? I know your type of funding, it didn't quite answer that question, but you know, maybe we could touch on it, is back to that project funding. If you're funding cash flow for a project, it does leave your regular, I think that's the most important thing you said earlier about your type of financing, is it leaves your day-to-day cash intact. So you're financing your project, and then your equipment payments and your rent and all of these other fixed costs are, you're not touching that cash. So you can feel safe and feel comfortable about having the cash in the bank to pay your employees and pay your debt, while you know this project financing or the cash for this project is already taken care of. So you don't need to stress about it. I think that's the most important thing, wouldn't you say, with your funding?
Yeah, it's essentially, it takes all the stress out of growth. It takes all the stress out of, oh, I've been finally waiting to get a contract with this GC or on this project or on these bigger bids, and I got it. But oh no, it's a great day and it's also a terrible day. What do I do now? Our loans are essentially, you have the use of our cash becomes just another cost of the job, like a material cost. So you use the cash, when you pay it back, and it ends up costing you a percentage of the margin of the job. And that's it. You use it as a tool, just like you buy materials and put them on site and bill them. It's the same thing. The beauty of our program isn't that we just loan the money, it's that we actually build that cash flow. And so I'll show you how to specifically use the money in the most efficient manner so that you can execute the job and perform it at its best and most perfect way. That way you can save money and get it done the best. And hopefully in often cases, you're able to save money just in efficiency. Like in case maybe you do the job in 2 extra weeks or 2 less weeks worth of time, which is saving 2 weeks worth of labor. You just made the job more profitable. Or you can use the money to buy the material you need so it shows up on time and you can then do it quicker. So those are the things that it does without putting stress on your cash budget. Repayment is in line with how you earn money on that job. So you're never in a cash flow crunch.
Mm-hmm. And I know we hear sometimes from contractors, younger contractors, not maybe more established contractors, but when they're initially looking for cash, some are pretty open to like giving people equity. And so just want to let everyone know that that's not always your only option, is to take money on a loan from a friend and you give them a percentage of the business or private equity, although sometimes that might be a great option. But some of the different options to look at, look at all of them, before you make a decision to give up part of the ownership of your business. A lot of people don't understand that your type of funding even exists. They think the only way to get money sometimes is either, with AR, selling their AR, or perhaps advances on their credit, or credit cards at 22% or whatever that ridiculous number is. So sometimes not everyone knows what types of funding is available. And so, speak to your circle of trust people before you make a decision about how to obtain financing as well. Look at your options, because one size does not fit all, with those.
Right.
Don't have any more questions. So if anyone has a last
Looks like
question.
everyone might get like a free 8 minutes back in your day.
I love that gift. Let's give everyone a free 8 minutes.
I know. I feel like that's a gift that we are giving to you.
Absolutely. Thank you everyone so much for attending. We appreciate you.
Appreciate everybody. Thank you. And Suzanne, thank you very much. You were great as always.
You're welcome. I'll see you guys soon. Have a great